What's going on, traders? Welcome back to my channel. It's been a while since I uploaded a video, but I've just been sorting some things out on my side, making sure that I can provide you with the best content that's available to you. Now, today's video, I'm going to be talking about a very common question that I get. How do you know when the markets are reversing? And I think that's a really, really important concept for two reasons. One, so that you can avoid taking trades in the wrong direction at too late of a stage, i.e. looking for buys in the market when the markets are or have been pushing for a very long period of time, or on the reverse, when the markets have been trending down and now have finally come to the end of the downtrend and are potentially going to reverse. That's the first reason. The second reason is because once you can identify when the trend reversal is more likely to happen, there's a very high chance that if you're able to get into a tradable opportunity, that you will be able to take advantage of some really good risk to reward ratio trades. Because opposite to the first point we made, you'll be getting in much earlier, which means you could take advantage of the whole trend. So I'm going to share with you two examples today. It's exactly the same concept and also the exact same thought process, but illustrating it twice in a buy bias market and a sell bias market should be able to give you some sort of insight that you'll be able to start applying to your trading immediately. So let's head over to the charts and let's take a look at both examples. So the first example we're going to look at here is on pound USD. Now we can see the market has clearly been trending up for quite some time. What we can identify here is that price is breaking above structural highs, which is indicating strong bullish sentiment. We also have areas here in the market where price is creating patterns that we're very aware of, where price creates a level and then respects that level. And then as you can see here, we now break the previous highs to make a new higher high. Just simple processes here in order to identify the current trend. Now, more often than not, when we're in an uptrend, price will create a higher low. Now, we're not saying that this is going to be the higher low, or we know when the lower high is going to be forming. I will be doing a video on that for you, but let's just say, work with me, this is the higher low. What we anticipate the market to do is repeat the same patterns over here after creating a high, breaking the high to make a higher high. So here we can see what is the higher low in this instance, and now what we expect the market to do is break the highs. Now, as you can see here, this level is very important for us to continue to identify the uptrend, because if price doesn't break this structural high and make a new higher high, then there's a very high chance that the bullish sentiment is depleting. Now, we don't necessarily have enough information here to confirm the bearish sentiment or the reversal, but what we can start to gather is that that is a possibility. Now, all we have to identify here is where the trend started. I know it started over here, but let's say it started here. This is where the trend started, and this is where it seems to be depleting. We can see that this move is a very strong move in the market, and more often than not, with very strong moves in the market will correct, or buyers will take profits, and then you'll start to see the markets reversing. So in this instance, we're now starting to gather that price is failing to break above these structural highs, and now we need to be a bit cautious about buying, because in theory, if it's in an uptrend and we buy the higher low or the retest, we expect the higher high that hasn't been made. So now what we want to do is we want to identify the last higher low in an uptrend and say to ourselves at this stage, I'm waiting for one or two things to happen. I'm waiting for price to break above this level strong, indicating bullish sentiment, to then look for continuation buys, or I'm going to then follow the behavior of the market, which is failing to break above structure, and then look for the break below and a potential retest or pattern to take the reversal. So let's see what happens. The market just continues to move sideways. I'm not going to continue to narrate this, but what we're waiting for the market to do is break the highs or break the lows to indicate where it wants to go. Once you have price tap in once here, twice here, once here and twice here, immediately direct your attention to the trend depleting, a range in market, or a potential reversal. So now we see the break below. This adds confluence to the idea that because we never made the new high and we're breaking below structure, the reversal is potentially in play. The two common things that you need to focus on is the failure to break a structural high and now the break of the previous higher low. So let's see what happens. Now, looking at this information, when we bring the confluences together, we surely now can identify that we're in a reversal phase. What we now need to do is we now need to wait patiently for the market to do one or two things. Come back to a key level as part of a retest, or we are going to be waiting patiently for the market to create a pattern. Now, let's say in this instance, you want to take this trade as part of a retest. Is this incorrect to take? Well, no, because we've gathered the information that price failed to break above these highs. We've now gathered the information that price has now broken below the major higher low, which ends the uptrend. And now we have a level in the market where price is respecting structure as part of a pattern, which is a break and retest. Is it valid to go in for this trade? Well, all the confluences line up and there's no reason why we can't enter this. We want to be placing our stop loss above structure and then we'll go for our targets. Now, another thing you need to be thinking about when identifying these potential reversals is this level important to us if we take a trade? In some situations, you will argue yes, because you want a break-even range and enough range from if you get triggered into your trade to this level before you find traffic and the market turns against you. And in some instances, no, because when you look at this, you have a structural high, a lower low, a lower high, and now what are you anticipating? A lower low. So in some instances, you can justify taking this trade if you don't have enough range, but you have to use a bit of initiative here or intuition and say to yourself, well, yeah, on this occasion, I can feel the market sentiment is really bearish. I can identify that the dollar is strong. We have price failing to break above structures. We have the break below structures, and now we have a retest with multiple wick rejections. It's probably best that I jump into this trade. So you take the trade, and now you just let the trade play out. Now, in my humble opinion, I just want to mention this to you. This is just for illustrative purposes. So I don't want you to think that every single reversal trade you take, like the one here today, is going to play out exactly how I've illustrated it. But if you can take note of some of the key principles and concepts that I've highlighted, then it's really going to help you out. Let's take a look at our second and final example. Our second and final example is on USDCAD. Now you can clearly see that the market has been trending down. It goes without saying. Now there may not be clear definitive lower lows and lower highs here, and the market may have not given you an opportunity to get involved. But what we can identify here in this structure is that it has been pushing down for a very long period of time. And during that push phase, what you will notice is that there hasn't been much of a consolidation. For a long period of time, there's been lots of bearish candles with lots of volume. Structures have been violated and broken very convincingly. But now all of a sudden, the market seemed like it was creating a lower high at this point, even a double top at this point. But you'll start to see now, from the way the candles are forming, they're starting to get a lot more smaller. And back to our previous principles here, you can identify that the major low that should eventually be broken in a downtrend to make a lower low has not been violated. Once we start moving into a range, what you want to do is you want to mark your highs and your lows to identify where price is failing to break above or below, so that if it does break above or below in this instance, you can identify a behavioral change. Now, we can identify at this stage that the reversal may be starting to build up. Sellers may be taking profits. The volume of the candles are not convincing that it's going to continue down. Plus, we've entered a range here. We need to wait patiently. What would invalidate this downtrend, as well as the confluence of price not making a new low and the volume in these bearish candles getting a lot more smaller than the previous ones? Well, we want to wait patiently for price to do this. Break close above structure. Now we have a trend that was pushing down for a long period of time. We also have, for the first time in a long time, price breaking above this brick wall here. We have a consolidation indicating bearish depletion, price failing to break some structural lows, and now we have our previous lower highs being violated, indicating a bullish sentiment. Now what do we do in this instance like this? Well, we simply wait patiently for price to create a level in the market. Now, our previous example came back for a perfect retest. In this instance, you can see that the markets are starting to form multiple wick rejections and potentially may not even get back to this level. But what we do know is that the reversal definitely is in play and that there is a higher chance that price will make a higher high at this stage than it would make a new lower low. So what we've got to be waiting patiently for is for the retest, the patterns, or an identifying mark of bullish sentiment. And how we would identify that is by waiting patiently for the market to create a level. So in this instance, we don't have the level yet. What we're waiting for the market to do is create a level of multiple wick rejections, like so. If this doesn't play out, that's fine. This will illustrate what I'm trying to illustrate here. And then what we're looking for is we're looking for the market to create a bullish signal. This is identifying to us part of the confluence of this downtrend ending is a depletion in bearish sentiment, a failure to make a new low, bullish sentiment, higher lows being formed. Granted, this didn't create the best formation for us here, but this is the point I wanted to highlight to you. Multiple wick rejections to highlight the higher low because we don't have to retest, and bullish sentiment. This is now enough evidence and confirmation for us to say, well, let's go in for the trade. Now, do we know this is going to win? We don't at this stage, but what we do know is that there is a much higher chance that price will create the high or just the low in this instance, the high, the higher low, and then eventually the new higher high. And then you go in for the trade. And this is how I want you to look at reversals here. Don't try to be the first to pick them from the bottoms, and don't try to be the first to pick them from the tops. Always make sure of two things. Price is failing to break highs and lows in downtrends or uptrends, and price breaking above previous lower highs or higher lows to indicate a behavioral change. Once you identify that, then look for your patterns, look for your higher lows or lower highs, look for your signals like your bullish and bearish candles to then say, well, now is the time to take the trade. So I hope you all found that useful. As I always say, make sure you go and back test this. This is a very powerful concept for identifying reversals, and I want you to go and look at the markets and see for yourself. Those simple concepts that I'm talking about here with the failures to make new lows and the failures to make new highs and the break above lower highs or higher lows is a very, very powerful concept based on behavior and structure. Go look at it for yourself and tell me what you think. But as I always say, if you enjoyed this video, make sure you smash that like button, subscribe if you've not already subscribed, turn on notifications, and until next time, continue to trust the process.